Let me ask you something. How much do you think you need saved before you buy a home here in Utah? I've asked that question to hundreds of people over the past 15 years, and the answer that I hear the most often? $20,000. Sometimes more. And almost always that number is completely wrong. There are buyers sitting on the sidelines right now, watching home prices climb month after month, convinced that they're not ready, when in reality, they might be a lot closer than they think. Today, I'm gonna break down exactly what it costs to buy a home in Utah right now in 2026. Including some programs that could get you in the door with $0 out of pocket. And by the end of this video, you should know whether you're closer to homeownership than you're led to believe. Let's get into it. First, a quick pulse check on where the market is at right now, because the context really matters when we're talking about down payments and the timing. As of early 2026, the median home price in Salt Lake County is $546,000. Salt Lake City proper is closer to $588 to $600 depending on the source. These certainly aren't cheap numbers, but the appreciation is measured and it's sustainable, running between 1% and 4% year over year. No spike, no crash, just steady movement. The National Association of Realtors actually named Salt Lake City one of the top housing markets for 2026, which is driven by very strong job growth and a young population with a lot of pent-up buying demand. Mortgage rates on a 30-year fixed loan are around 6 to 6.3% right now, with forecasts predicting around the high fives by the end of the year. Homes are sitting on the market a little bit longer than they did last year, with the average being between 50 and 68 days, which gives buyers more time to think and to negotiate. We're definitely not in a panic buy situation like we saw back in 2021, but the inventory is still constrained and well-priced homes are still moving very quickly. So the question is, are you positioned to move when the right home comes along? That starts with understanding what you actually need up front. And that's where most people have it completely wrong. The you need $20,000 saved rule is one of the most persistent myths that I run into as a real estate professional here in Utah. And I get where it comes from. People hear 20% down and they back calculate. On a $400,000 home, that's $80,000. So $20,000 starts to sound like a reasonable starting point. But 20% down on a home hasn't been required for decades. There are multiple loan programs, including some that are specific to Utah, that allow you to buy a home for far less money up front, some as low as $0. So let me walk you through the main ones. I'm going to use a $400,000 home as our baseline for right now. That is still realistic for some parts of Salt Lake County, but actually at the lower end of the market right now. We'll start with the more common programs that you've probably already heard of. Of course, there's the FHA loan, which traditionally comes with a 3.5% down payment. On a $400,000 home, that's $14,000. You're gonna need at least a 580 credit score to qualify for this one. Gift funds are allowed if you have someone that wants to offer you some money as part or all of the down payment. And you can often negotiate with the seller to cover most or all of your closing costs. But it's one of the most accessible home loans right now for first-time home buyers in Utah. Next up, of course, is the conventional loan. And a lot of people think you need 10-20% down for this one, but you don't. You can get a conventional loan for as low as 3% down, which is around $12,000 on a $400,000 home. There are income limits that do apply, but many Salt Lake County buyers still qualify. Competitive rates and flexible underwriting makes this a very strong option for most buyers. Next up is the VA loan, which offers $0 down. If you're an eligible veteran or active duty service member, this is one of the most powerful loan programs in existence and a great benefit for those who have served our country. 0 down, no PMI, and competitive rates. And it's massively underutilized. If you or anybody in your family has served the country and they're looking to purchase a home, this needs to be the first conversation that they have with the lender. Next up is the USDA loan, which also offers 0% down. These are designed for rural and semi-rural areas, and there's more USDA eligible spots around Utah than most buyers think, including some that are on the outskirts of Salt Lake County. 0 down, low rates, and often less mortgage insurance than an FHA loan. It's definitely an option that's worth exploring if you're open to areas that are outside the urban core. So right there, you have 4 different paths to home ownership that are 0 to 3.5% down. But we're not done yet, because there's 2 other options that are specific to Utah that most people haven't even heard of. This is the section that I really want you to pay attention to, especially if you're a first-time home buyer, because these programs are state specific and a lot of buyers just don't know that they exist. First, the Utah Housing Corporation First Home Loan. The Utah Housing Corporation, or UHC, is a state agency created specifically to help Utahns afford homes. The First Home Loan program is designed for first-time home buyers. And here's the key feature. It can get you in the door with effectively $0 down. Here's how it works. Technically, the program does require a minimum 3.5% down payment, but UHC pairs it with a down payment assistance second loan of up to 6% of your primary loan amount. The down payment assistance can cover your down payment and your closing costs in full. So in practice, you can buy a home with no out-of-pocket down payment. This loan does require a 660 credit score, and you do have to be a first-time home buyer, or at least no home ownership in the past 3 years. And there are purchase price limits based on county and household size. There's also a home homebuyer education course that you're required to attend. And the second loan does accrue interest, but it does cover all of your closing costs and your down payment. And in many cases, you can stack the UHC program with other grants and opportunities. If that's something that interests you, you're definitely going to want to talk to a lender and see if it's something that you would qualify for. Next is Utah's SB 240 New Construction Assistance Program, which is up to $20,000. This one's a big deal. In 2023, the Utah Senate passed SB 240, the first-time homebuyer assistance program. And as of right now in 2026, this program is still active and still funded. Here's what it offers: up to $20,000 in assistance for first-time homebuyers who are purchasing a newly built or never before lived in home under $450,000. The funds are administered through the Utah Housing Corporation and can be used for your down payment, closing costs, or to buy down the interest rate, which can actually lower the monthly payment for the life of the loan. When I sold new construction townhomes, this was a program that was utilized very often. Buyers were able to get this $20,000 towards their down payment, their closing costs, and to buy down their interest rate, which saved them hundreds of dollars a month. It also helped buyers get into a home that wouldn't have been able to get into one otherwise. Now, this money is an interest-free loan, so it's not free money, it's not a grant, it's actually a loan. But there's no payments and there's no interest on the money. You end up paying the $20,000 back if you sell the property or refinance down the road. Now, the one catch is that the funds are limited and they do go fast. And they have added to the funds a few different times over the years, but we never know just when this program is not going to be available any longer. So if it's something you think you might be able to utilize, you're going to want to act fast. One of the most common objectives that I get to a lower down payment is PMI, or private mortgage insurance. Nobody wants an extra monthly expense. I totally get it. But let's put some real numbers on it. On a $400,000 home with 3% down, PMI is going to run you around $100 to $150 a month. But here's the other side of that equation. If the home appreciates at just 4% annually, in line with current Salt Lake County trends, that's $16,000 of equity gained in a single year. If you spend 2 more years waiting to avoid PMI, you may save a few $1,000s in insurance costs while watching $30,000 or more in equity accumulate in somebody else's home. And with most loans, PMI isn't permanent. Once you hit the 20% in equity threshold, through appreciation, pay down, or a combination of both, you can request to have it removed. Or if you can't get it removed because of your loan program, such as FHA, you can just refinance into a conventional loan and have it removed that way. But either way, it's a temporary cost with a clear exit. It's not a life sentence. The math doesn't always favor waiting. In a market that's still appreciating, time in the market almost always beats timing the market. So if the answer isn't $20,000, what is it? Honestly, there's no universal number. How much you need depends on 4 things: your credit score, your income, the loan type that you qualify for, and what programs you're eligible for. And those 4 variables can swing the number dramatically. The single most valuable thing that you can do right now, if you're serious about buying in the next 6 to 18 months, is get a real pre-qualification done. And I'm not talking about a mortgage calculator. I'm talking about a real-life mortgage loan officer that can review your situation and tell you all the programs that you potentially qualify for. That conversation is absolutely free and it changes everything. With over 15 years in the business, I happen to know several really great loan officers. So if that's something that you would like to do, is take that next step and speak to one, reach out. I'd be happy to provide you with a recommendation. We're in a genuinely interesting moment in the Salt Lake County market right now. Prices are appreciating steadily, but not spiking. Buyers have a little bit more negotiating room than they did a couple of years ago. The mortgage rates are stable, with a real chance of them ticking lower by the end of the year. And there are state-funded programs that are actively putting money towards buyers right now, specifically to help people get into and afford their homes. If you've been waiting for the right time, pay attention. The market isn't going to crash. Inventory is still tight, and some of these programs are first come, first serve. The current window is not going to stay open forever. If you have questions about which of these programs you might qualify for, whether that's in Salt Lake County or anywhere along the Wasatch Front, drop them in the comments. I read every single one of them. Or reach out directly. I will leave my contact info in the description below. I'm happy to help you figure out where you actually stand and connect you with the right resources. Also, share this video with someone who's been sitting on the fence. They might be closer to purchasing a home than they think. And be sure to subscribe for more straight talk about Utah real estate. I will be posting a video every single week. Thanks for watching. I'll see you in the next one.